Welcome to the Meta Exchange. Have you ever discovered or stumbled upon a trading strategy but not sure which currency pair, time frame, or risk to reward ratio to use? Well, fret not, because our channel is here to provide you with the information. Hello everyone. In this video we will be testing extensively on one of the most common trading strategies in technical analysis, the RSI Crossover strategy. We will first give a quick explanation on RSI Crossover strategy. Next, we will go through some examples. And most importantly, we will test the effectiveness of this strategy on gold and all the major and minor currency pairs. So what is the RSI Crossover strategy? To those of you who are familiar with RSI Crossover, please bear with my explanation on this trading strategy. RSI, which stands for Relative Strength Index, is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes, and can have a reading from 0 to 100. In this RSI Crossover strategy, we will use the default setting. The period is set to 14, the oversold area is set to 30 and the overbought area as 70. We will also be using the exponential moving average 200 to set the general trend of the market. To get a buy signal from the RSI Crossover strategy, first, the price has to be above 200 EMA. This will signify an uptrend. Second, the RSI value needs to exit the oversold area. This means that the previous RSI value is less than 30 and the next RSI value is greater than 30. As for the sell signal, first, the price has to be below 200 EMA. This will signify a downtrend. Next, the RSI value needs to exit the overbought area, which means the previous RSI value needs to be greater than 70 and the next RSI value is lesser than 70. Let us go through a few buy and sell examples of the RSI Crossover before we proceed with the actual in-depth testing. For a buy signal, first the price is above 200 EMA. Second, the RSI value exits the oversold area. We will enter trade here, and in this example I will set a 50 pips stop loss, with a 1:3 risk to reward ratio. And this is a winner. Next, for a sell signal, first the price is below 200 EMA. Second, the RSI value exits the overbought area. We will enter trade here. Similarly, I will set a 50 pips stop loss, with a 1:3 risk to reward ratio. And this is a winner. Now that we are familiar with the RSI Crossover strategy, it is time for us to test it out on all the currency pairs. We want to be as thorough as possible, so these are the different permutations that we will be testing. We will run the test on all the 28 currency pairs in gold. The testing duration will be the whole of the year 2021. The time frame will be 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, daily and weekly. As for trade management, the lot size will be 0.1. The stop loss will be starting from 30 pips and increment to 50 pips. The risk to reward ratio will be between 1:1, up to 1:3. Lastly, we want to test if limiting to 1 per trade will minimize our losses. We have coded an expert advisor to help us with the backtesting. We have also verified the trades that were executed by the EA on TradingView to be sure that it was executed correctly. After many hours of rigorous testing, we were finally able to compile all the results and did a bit of data analytics on it. Now, let us answer the main question: how effective is this strategy and what are the currency pairs and settings to use? First, let us filter the results we have. We'll set the profit factor to greater than 1, same goes for the recovery factor. These two values have to be greater than 1 to have a profitable trading strategy. Next, we set the equity drawdown percentage to less than 30%. We do not want to see a great drawdown on our account. After that, we filter by the highest profit, and we will get our results. At number 10, we have EURJPY. The percentage drawdown is at 1.68%. This means in 2021, If we use an account of $10,000 in the lot size of 0.1, the maximum drawdown would be $168, and the profit would be $542. In 2021, a total of 15 trades were executed. These signals were based on the optimal setting of 30 minutes time frame, with the stop loss level at 50 pips, and the risk to reward ratio set to 1:2.5. The profit may not be high, but based on the equity curve, it does have a consistent win rate. Next, we have the Great Britain pound and Canadian dollar. It has a slightly higher profit percentage. However, the drawdown percentage and number of trades executed were also higher. The optimal settings were 15 minutes time frame, stop loss level at 50 pips, and using a risk to reward ratio of 1:3. This pair also has the one trade at a time set to true. It cannot execute more than one trade even if there is another buy or sell signal. The equity curve shows a peak in July and stays around that profit level. Overall, this pair has positive profit with an acceptable drawdown. At number 8, we have the US dollar and Japanese yen. The drawdown percentage for this pair is slightly higher compared to the previous two pairs, but it also achieved a higher profit percentage. The optimal settings for this pair, 15 minutes time frame, stop loss level at 50 pips, and using a risk to reward ratio of 1:1.5. This pair had mixed results and waited until the August period to be profitable. There were a total of 48 trades executed in 2021. This is the highest among the top 10. Overall, it has achieved a good profit percentage. Number 7, we have the US dollar and Canadian dollar. This pair achieved the same profit percentage as the US dollar and Japanese yen with only 8 trades executed. In addition, it has the lowest percentage drawdown among the top 10. The optimal settings for this pair are 1 hour time frame, stop loss level at 50 pips, risk to reward ratio at 1:3. And to only trade one trade at a time. I personally like the result and equity curve of this pair. We are halfway there. At number 6, we have the Canadian dollar and Japanese yen. It has a slightly higher profit percentage compared to the previous pair. The drawdown percentage is the second lowest among the top 10. The optimal settings for this pair are 30 minutes time frame, stop loss level at 50 pips, risk to reward ratio at 1:2.5. And to only trade one trade at a time. Overall, this pair also has a very nice smooth upwards equity curve. We are now in the top 5. At number 5, we have the Australian dollar and US dollar. The drawdown percentage for this pair is slightly higher, however it gives a good 6.8 profit percentage. The optimal settings for this pair are 15 minutes time frame, stop loss level at 40 pips and risk to reward ratio at 1:3. The equity curve was downwards at the start, and most of the trader might just give up over there. However, if you persist until the end of the year, you would have achieved a nice smooth upwards equity curve. At number 4, we have the popular Eurodollar and US dollar. The drawdown percentage is better than some of the previous pairs, and the profit percentage was high as well. The best settings for this pair are 1 hour time frame, stop loss level at 50 pips and risk to reward ratio at 1:3. This is also one of my favorite pairs as it has a very nice smooth profitable equity curve. It has a low drawdown percentage and high profit percentage. Moving to the top 3. At number 3, we have the Australian dollar and Swiss franc. This pair has a high profit percentage and a low drawdown percentage. The optimal settings are 30 minutes time frame, stop loss level at 50 pips, and a risk to reward ratio at 1:3. There were a total of 19 trades executed in 2021. The equity chart is moving upwards and getting higher and higher. I like the progress of this equity chart. At second place, we have the Australian dollar and Japanese yen. This pair has a very high profit percentage compared to the previous pairs, with 12.7%. The drawdown percentage did not increase as much, it is at a healthy level of 3.43%. The optimal settings are 15 minutes time frame, stop loss level at 50 pips, and a risk to reward ratio at 1:3. There were a total of 36 trades executed in 2021. Similar to Australian dollar and US dollar, the pair did not perform well during the first half of the year. However, the equity chart took off in July period. making more and more profit. In the first place, we have the Great Britain pound and Japanese yen. This pair has the highest profit percentage of 21.50% and comparatively low drawdown percentage at 8%. The optimal settings to achieve this result are as follows. 5 minutes time frame, stop loss level at 50 pips, and a risk to reward ratio at 1:3. There were a total of 77 trades executed in 2021. In order to achieve such a high profit percentage, this pair has to be traded on a relatively low time frame as compared to the rest. It will generate more trade signals and therefore a higher chance of profit. The equity chart for this trade is relatively good. It has a few profitable moves and some minor setbacks in November. And there you have it. We have identified the top 10 currency pairs and the best settings to be used for RSI crossover strategy. We hope this video can give you some ideas on how to trade using this strategy. I am also excited to test this strategy out with the settings mentioned in this video. Let us know in the comments section if you are interested to see the result of the forward testing. We are new to YouTube, and we would like to hear your suggestions on how to improve our backtesting methodology. Please feel free to comment down below. If you have a trading strategy that you would like us to backtest or to create an expert advisor from it, please email us at themetaexchange@gmail.com. Last but not least, don't forget to click the like button and subscribe to our channel. Thank you. The Meta Exchange, signing off.